Welcome back, everyone, to the Risk Intel podcast, powered by SRA, where we share risk intelligence from experts across the banking industry. I'm your host, Ed Vincent, Executive Vice President at SRA. Hello, welcome to the Risk Intel podcast. I'm Ed Vincent. With me is Niki White, Chief Growth Officer at Strategic Risk Associates. Welcome, Niki.
Thank you, Ed.
Niki, you've worn a hat prior to joining SRA, where you were a banker yourself. You looked after risk and audit functions inside a bank, and so I think that you're uniquely equipped to answer this question today around enterprise risk management in banks that are under $1 billion in assets. So I know you've had a handful of conversations recently with banks that are under $1 billion in assets on this topic. But before we get into those specific examples, maybe take half a step back and talk about why a bank of that size, a bank under $1 billion, why would they invest in ERM to begin with?
More and more, we're having conversations with banks that are at the $700 million in size, $800 million in size, done, $600 and $500 million. And really, they're taking that approach to prioritize investing in risk management for a couple of different reasons. One is it can be more efficient. And so as risk operations and risk data has historically been very siloed, and it takes a lot of conversations to really gain an understanding from a management and a board perspective to be able to articulate where the risks are that are impacting the bank's ability to meet their strategic objectives, to hit their budgets, and to ultimately operate in a safe and sound manner, regardless of their size. Pulling together that disparate risk data has proven very inefficient, and it has become a burden, especially as some banks are operating in either a virtual environment or in some geographic dispersion. There are different operational centers in different places, and not everybody's sitting side by side anymore. And so being able to learn and collect information, as well as to have that documentation to tell your risk story, has proven a valuable exercise to prioritize, to bring it together into one risk aggregated approach.
All right, so there's an efficiency aspect of that. There's the aggregation, so you have that total view, and then the ability to then tell a story based upon that, whether that story is to a regulator, an investor, a stakeholder, a management team, right? So, those are some really very tangible reasons for wanting to invest in enterprise risk management. You have had a couple of conversations recently with banks that are right at the crosshairs of this moment. Can you share an anecdote or two from those conversations that you learned from the banks themselves?
Absolutely. And we always appreciate the conversations that are proactive rather than reactive. We're happy to help any client that already has an issue, but more and more we're seeing clients that are saying risk needs to be a prioritized element of all of our strategic goals. And in so much as to say that not necessarily do we have risky operations, but maybe we want to take a step into a different area, something that we're a little bit less familiar with. We need to know that we have that risk infrastructure, and we need to be able to articulate what that risk position is, so that whenever we do have those regulatory conversations, we're coming to the table very well prepared. And so that whenever we are having those board level conversations, our board understands the risk that they are taking from a governance perspective, and that they're understanding the actions that management is proposing.
Being proactive and getting ahead of a business decision, right, and equipping yourselves to have those conversations with the board. Really specific, tangible. Thank you for those examples. Anything else to share with banks that are considering going down this path?
One other piece that I'll leave you with is, as you are approaching $1 billion, or as you are approaching some other regulatory milestone, you need to start preparing in advance of actually hitting that mark. So sometimes there are changes based on asset size that come into play as you do grow. And so taking a proactive approach to that and having those parameters at least identified, if not in place, and having an action plan of how you're going to get there tends to drive the conversation in a very productive way.
Terrific. Thank you, Niki. Appreciate your thoughts there on why smaller banks under $1 billion in assets, should be considering enterprise risk management as part of their objectives and activities as leadership teams within the bank. Thanks very much.
Thanks, Ed.